Hello friends, today let us talk about US Federal Reserve rate cut. First, a small disclaimer. We provide information for general guidance only. Any investment decision you make, please do complete research. The US Federal Reserve has cut the interest rates by 50 basis points, and this has happened first time in 4 years. Now let us try to understand why US has cut interest rates. So uh, after COVID, US had to increase the interest rates many times in order to check inflation. Now what is inflation? Inflation is when things start becoming costlier. That is when goods and services become expensive and you as a consumer have a lower purchasing power. So you're not able to buy the goods and services. So in order to check this, US government had to increase the interest rates many times after COVID. Um, what happened is after COVID, there was a surge in demand for goods and services because people started going out. Also, governments had pumped in money in order to take care of the economy. They also took many financial measures. Now, this led to people having more purchasing power and therefore increase in demand for goods and services. Now, this increase in demand for goods and services further led to increase in prices of goods and services. Therefore, US had to, make the interest rates costlier. So, because of these costlier or higher interest rates, now what is happening is it has started affecting the companies, and the borrowings have become costlier. You can see that some smaller companies have closed down, while some other companies they are able to manage the higher interest rates by taking cost cutting measures. Now, these cost cutting measures they are actually having a direct impact on the recruitment. That is, there is lower hiring, there's more of layoffs, and also it is affecting the salary of the employees. Now, if this continues to happen, then it can indicate that US can go into a recession. Now, in order to stop this, the US Federal Reserve has cut the interest rates. Some of the advantages of this US Federal Reserve rate cut is that a lower interest rate could mean a higher flow of investment in countries like India, and more investment in countries like India can push up the stock markets. Foreign banks and foreign companies can borrow more. Cheaper interest rates means the dollar becoming a bit cheaper too. Some of the negative impact that we can see would be that it would impact the IT stocks because their revenue depends on dollar, and a cheaper dollar would mean less revenue. Also, if you see in commodities, especially the crude oil, the demand for crude oil would go up because of the dollar becoming cheap. But as the demand goes high, the crude oil prices also would go up. And in India, because we import crude oil, we will have to pay more for our energy, and this can lead to an inflation in India. So we need to keep a close watch on these rate cuts in the coming months. So if you like the information we have provided and if you feel it is useful, please like, subscribe and share. You can also give your comments in the comment section. Thank you.